Hello, everybody. My name is Drew Dosek, and welcome to Trading the Close. Today, we saw a little bit of upward movement that was on the back of news with lighter PPI data. So, what that means, the producer side index is actually coming in a little bit cheaper, helping the inflation out just a little bit. So, good news though for future inflation. We'll see how long that stays because we do have impending tariffs on the horizon. All right, so let's jump into some data so we can see what's going on with the general market here. We've got the S&P 500 heat map. You can see it's kind of a mixed board here, even though we do have slightly upward movement in the markets. We have Microsoft up 1.21%. Here's the big standout of the day. Oracle up 13%. Huge move off the back of earnings. Apple's flat. Nvidia's up 1.44%. AVGO up nearly 1%. Tesla pulling back just a little bit, down 2.24%. But in general, we have just a broad, slightly green day on the market. So let's jump into the spiders, S&P 500 and actual XPX, see where price action's going. So you can see here earlier today, we were really flirting with breaking down underneath this trend line, but then we just started floating right back up. If I get in the 10-minute chart, you can see how that happened. We came into the day right here, and then we just floated, had a little bit of pullback, and then just sideways consolidation going into the close that we have right now. Back to the daily chart, you can see here though, we still have this similar formation that occurred up here near the previous all-time highs on the S&P 500. We have a little bull trap scenario right there. Will that occur here? It's still to be determined, guys. So we're going to see here potentially tomorrow. Now we have Michigan consumer sentiment coming out at 10 o'clock in the morning. That could move markets. Aside from that, it will be likely a lighter volume as we are in the summer doldrums. All right, so next up we got the Qs. Qs here, notice this diagonal fashion of the move. We have not yet tagged the all-time highs, but this diagonal move like that, it typically leads in stocks pulling back. And if you don't have to go far to look at this, look just right over here on the charts. Look at this diagonal move up, and then what happens after that diagonal move up? A big move down. We have a diagonal move up, and then a big move down. That's just another here, a diagonal move up, big move down. That's just how the patterns present themselves and typically what happens after a diagonal move up. So as you know too, and I'll flip back over to the S&P 500, we do have some divergence going on the daily chart. We have a higher RSI here, right in this area where we made a pivot, but then we also have made higher prices with a lower RSI. The thing though that I caution against with that is that you flip it over to the weekly time frame, and look, we're still just chugging along right here in the RSI. So I wouldn't necessarily go only by this, but at least on the daily pattern, it is showing a likelihood for some consolidation or pullback for both the S&P 500 and the Qs down here. So if I flip to the weekly on the Qs, it's the same thing. Just notice that we're just continuing to chug along and move up. So everything's healthy on the RSI and the weekly time frame, but not on the daily. So that's a shorter time frame, meaning smaller movements that could potentially happen, maybe even pull back down to this support area right here at 522.24 before moving back up and going higher. Into the SMH. SMH, another fantastic day today, recovering from slight down movement yesterday, and in essence starting to create some bullish consolidation. We'll see how that pans out into tomorrow, into Monday, but still all in all, great move on the SMH. And the SMH right now does not have any divergence going on the daily RSI, also telling me there's a chance we can go higher. Now keep in mind, the semis lead the way, folks. So wherever the semis are going to go is going to likely determine the direction for the rest of the markets. Into the IWM. The IWM is pulling back, and again, that's to be anticipated after this nice breakout move that we've seen on the charts. I think we could still pull back a little bit further down here to 209.53, and if we do so, that should be a good support area for a potential bounce for these small cap stocks. Into Bitcoin. Now, Bitcoin, as you see, is starting to face some pressure today, coming down, breaking this 50% area of the parallel channel. Now, zoom in here on the 10-minute chart. You can see here when price first came down here earlier today, right around lunch, we had a bounce right up off the 50% area. We pierced through, tried to get back up, couldn't hold, and then finally pushed higher. Looks like we were going to be going much higher on the charts here in the 10-minute chart, but then we stalled out right here where all this chop action is. Notice where price is. If I just go straight over here, that ended up being the resistance for the day. Risk sentiment is starting to have folks pull away profits from Bitcoin. As you see, starting to now break down this 50% area of the parallel. That range is $107,000 or $107,400. Watch this tonight at 8 o'clock tonight to see if we close above or beneath that level. That will then dictate likelihood of where we're going to continue going in the very near term for Bitcoin. If we continue down lower, first area of support 103,187, followed by the major support area right here at 98,000 into gold. Gold's now pushing up higher. And after further analysis of this, we actually have already confirmed above this downsloping parallel. And the reason why is this red candle. This red candle, if you zoom in on the charts, you can see here that we did close back inside of this parallel, then made another breakout right here on Monday to close above the parallel, then confirmed right here on Wednesday. So now we have a breakout pattern above this parallel, triggering the inverse head and shoulders on gold, which means it does have a targeted measured move of 36.21. So watch that for potential tag in the near to midterm for gold. And we'll get into one of the gold miners later to show you how this is all starting to line up for a potential move higher on gold. Into silver here. Silver, you see here, we had a very nice sell-off on silver earlier in the day, but have since bounced back and recovered all of those losses. A great move on silver here with a big test candle moving down. Now, if you notice on the 10-minute chart, you can see all that selling really happened right here overnight. So we sold off down here to the lows right around $35.44 and then just catapulted back up. Nice V-shaped recovery there. Ultimately, on the daily chart, what does this mean? It just means that we're consolidating in a bullish pattern, potentially for an opportunity to move higher up to that 38.97 measured move target from this inverse head and shoulders pattern. Into US oil. US oil, look at the amazing things that you can find, guys, with technical analysis. Now the oil did move up rapidly yesterday, and that was back on the news of potential turmoil and conflict in the Middle East, with all of the diplomats being told they could leave, or actually requiring them non-essential personnel to leave Iraq, Bahrain, and Kuwait. So that is giving some foreshadowing that there will and potentially be conflicts. We don't know if this is part of the deal negotiations as far as what the United States, Israel are trying to negotiate with nuclear deals with Iran. We don't know if this is all just a front, but needless to say, this sort of move typically implies some military conflict in the near to midterm. So watch out for that. And that's why oil did explode up higher. But you'll also notice, much like silver, we had a big sell-off on oil today too, and it's since recovered. We'll zoom into the 10-minute chart. Look how amazing technical analysis is when this measured move is hit. A lot of other technical traders like myself noticed that that would be a great place to sell had they been into oil when it was lower on the charts. And so that's where that selling pressure came in, pulling price all the way down here near the $66.70 range, and since now finishing up higher on the day. So again, much like silver, this is still going to be a good close. We'll see if we'll chop around in this area. If we do, next area of resistance is going to be the trend line here at $70.87. Into nat gas. You see nat gas is broken down out of this wedge and has since now started chopping sideways. One of the reasons why we caught support where we did is this big green candle that you see. Notice the low of that candle caught price right here. And until this green candle is broken, this still can chop around within that green candle and break up or break down. But now when we're at the bottom end of this area, having tested the bottom end now twice, that leaves a breakdown more vulnerable than a break up. So first support at $3.38 there on that chart. Into the 10-year. 10-year did fall down nicely today. And much like the previous chart with nat gas and silver, we have not broken the area here on this low yet. So we'll see tomorrow if we have any further decline in the 10-year yield, which would then be helpful for the rest of the markets and also the dollar itself. Into Oracle. Oracle, you see here, is pushing up tremendously on the back of news of great earnings. You see here beating earnings per share 3.5%, and then also with revenue beating by 2.06%. Big, huge catapult move. Now, one thing I caution everybody on, whenever you see a move like Oracle's on the chart. We've already been moving up so much into earnings, and then we moved even higher after earnings. That really is a blow off top scenario where price likely is going to start coming back in over the next few trading days. And the reason being is that there was just already so much buying pressure, and the move now is really extended up on the charts. It makes sense for everything to balance out, come back down a little bit. So here's where price is likely to go. So we jump back into the charts. Notice how price jumped right back into this parallel channel. So that means that down here on this inclining portion of this parallel channel will likely catch price should price continue to sell and come down a little bit lower. This area of the parallel channel is roughly $183.13. Notice how that area also corresponds with the previous pivot high right here. So I would anticipate Oracle to come down a little bit more before pushing higher. Notice we made brand new all-time highs today too. Here were the previous all-time highs. When I scroll back on the chart, you can see where I find the next major area of resistance on the chart from this pivot back here in December of 2021, connected over to this pivot high right here in November of 2024. And as you see here on the charts, we've got this trend line strung across. If we were to hit that in the near term, we're talking about 213.47, but it will also have to get through this inclining 50% area of the parallel, which will also be resistance. So that will be a very tough task. Look at this chart. It's moved up down here from $121 all the way up to over $200 today, nearly in a straight line. That sort of movement needs some sort of rest, some consolidation, some pause. So the more probabilities are shifting towards a pullback and then maybe an attempt to go up and tag that yellow trend line that you see on the charts. Next up with Newmont mining. Now, it's important to consider the miners whenever you're investing in gold. As I pointed out earlier, gold has a shot to move up to the $3,600 range. And then you look here on the gold miners, and Newmont's also showing it's got an opportunity to go up and make new highs, at least for this year. You see here what I've got drawn. I've got a declining trend line right here. Well, that is an inverse head and shoulders pattern on the chart with a measured move target of $59.33. You want to see something even neater. If you want to find where price could go after that move up, we have this trend line drawn from the pivot back in November of 2023. And then we connect that over, and actually that's January of 2023. If I connect that over to the very next pivot, notice how this aligns just above that measured move of $59.33. Zoom back in the chart, we're only talking about a move right here to basically $60.20. So even if Newmont pushes up and tags this measured move, this area will likely start seeing a lot of selling pressure simply because we've got this longer term trend line and that measured move is going to be completed right in the same zone. So this could be a good buy and sell right up here on the chart for Newmont. Into Carvana. Carvana finally started breaking down today. Also, notice the big dramatic vertical move on this chart. Very similar to what we're seeing with Oracle minus its huge blow off top that is occurring today, making new all-time highs. So Carvana's had a lot of interest, a lot of folks investing here in this stock, but there comes a time people need to take profits and the price will start coming back in. So for right now, the first area of support is going to align right here at this previous bull flag area, which also corresponds in the 50% area of this parallel, right at $303.29. Into Apple. Apple, as we see here, did have a decent day, but also tagged this area of support. Apple is also putting in a doji candle off of this sideways consolidation. So this move down and a move to the side, that's somewhat bearish consolidation. We'll have to keep an eye on this to see if we start breaking down a little bit lower on the charts or if we do move up a little bit higher and then break that trend line. Right now, it's kind of in no man's land, and Apple is really under pressure with the pending tariffs on China, which President Xi has not yet confirmed. So keep that in mind. Even though we might have sent them over from the United States, they still need to be confirmed, and more news will be released about that. Now let's check out Google, because Google is something important to understand here, folks. We've got Google that has announced about a month or so ago that they are not having as many searches done through their website, that more folks are starting to go to AI to search. Well, Google generates so much revenue off of search dollars. All these companies start piling in ads through Google to make sure that their company comes up top or their sponsored company comes up top. That way folks can click on that first. Well, if that's starting to go away, what is Google going to do to pivot? Now, Google's a massive company. They own several different types of technology. I'm sure they're going to be able to figure this out, but one has to wonder and one has to think, is this going to be the end of Google? Is this going to be a time moving forward where folks are not using Google to search? It's been part of us basically for the last 20 years plus, where we just Google something. Google's been a verb. So this is why I see back on the charts, if you look, we're decent ways off the top. You know, AVGO has made new highs. We're 15% off the top here at Google. So I think investors are starting to recognize the dynamic shift between Google searches and AI searches. How is Google going to capitalize and get that revenue back if companies are not going to be investing those advertising dollars? Thus why Google really hasn't propelled near the all-time highs, much like the way the S&P 500 is currently. All right, so we did tag or kiss resistance right up here at 181.64. A long area for Google on the support line should provide decent support right around 171.66. If I were interested in going long Google, I would wait a little bit further down at this trend line right at 165.90. Into QUBT, quantum computing, as you see here, really did take off the last couple days. And I told you guys this before. I had mentioned, guys, price is going to be pulling back on the chart. Wanted to at least show you this. So don't FOMO. Wait for an opportunity to get into a trade. We don't need to be following up and getting into these trades when they're running out of steam. Recognize the extended move because price does eventually come back in. All right, so next up, let me check out and actually, that's really it. We've got QBTS. These are ones we covered yesterday, all showing the falls there on the charts. And even with OKLO too. Look at this OKLO fall that we've had. Now, one amazing thing, we covered this yesterday, guys, and yesterday we were right here on this green candle. This is one of the most amazing things to recognize and keep in mind. So right after hours yesterday, OKLO announced they are going to be making an offering. And so in essence, fundraising, since the price of their stock has gone up so much most recently. So this is what can happen. Don't get caught FOMOing. Wait for price to come down to your level to buy. We see it over and over on the charts, much like this. Right after hours, you can see it in the extended trading hours yesterday. Within 10 minutes, a company announced that and the stock just retreated off the highs. Now, there were certainly more investors trying to pile in and get back into the stock, but with the offering still going on, I think price is likely to come back down here to the $58 range before it does continue moving higher. All right, and you see here a daily topping tail looks like it is being registered on the charts today. All right, guys, I also want to remind you, June 23rd, we've got Investor Empowerment Day. It's an amazing day in which anybody here that's watching can now get a scope as to what we do on a daily basis, all the education that we provide, all the services we provide. Plus, we're going to be running some great promos too. Check out more details on our website. We'll have more information there in the coming days for what we're doing to empower you, the retail investor, so you all can understand what the pros do. All right, guys, thanks so much for watching Trading the Close. I'll see you guys next time on Monday. Until then, happy Father's Day to all the fathers out there. You guys take care.